Sergey, on the back lot of Warner Brothers on 1010, which I call an autonomy Disneyland, Tesla unveiled Cybercab. Really cool, no pedals, no steering wheel. Big question though. How the heck do you insure that?
It's a very important question because if we don't have an answer for it, then there's going to be no cybercap. That's really important to note. It's probably maybe not the first time, but it's the first time it's as pronounced as it's going to be that insurance will actually prevent autonomy from happening if not resolved. To answer this question, we need to understand how cybercap is going to be owned. If it's owned by an individual and then the individual person uses that, right now there is no insurance product to insure a personally owned autonomous vehicle. It just doesn't exist. However, if cybercaps used as a part of the fleet, and there is like a company that manages that fleet, let's say of like 10, 20, 30, doesn't matter, we can insure that. And we already have products for that today. But that personal ownership is a huge question mark how that is going to work. And I believe that the only way to figure it out, at least as far as I can see, is for Tesla Insurance to step up. I actually have a theory that Tesla Insurance is being created in the first place in order to help Tesla promote autonomy. And if Tesla Insurance comes up with a product, which I don't think they have right now, but they might be the best fit for it, where they can sell it to consumers and is going to protect consumers against third-party liability for cybercaps that do not have the pedals, the steering wheel, and are fully autonomous on running on FSD, then that could be the game changer, and that's going to drive adoption. So that's how I envision this is going to play out. But of course, we yet to see how the legacy insurance is going to respond. And Koop is all here for it.
You're there for it, definitely on the fleet side. I'm really curious. So Tesla is 18 states now that currently have an insurance license. How hard is it theoretically for them to get all 50 states of coverage? Because it seems that if I'm progressive, I'm a Geico, I'm going to lobby to stop this. Because in theory, if this thing takes off the way the Model 3 took off, the way the Model Y took off, I've got a big problem as it relates to my business.
Getting to all 50 states is actually not that hard. It's just time consuming because you have to go to each individual state Department of Insurance. You have to file your product. Then it gets reviewed. There might be some back and forth. And then it goes live. And then you have to set up the local distribution or however Tesla sells that. But I don't think it's going to be a problem because it's all done through their app or through the website. So logistically, it's just a matter of timing. And they can be in all 50 states if they want to. It's just a matter of demand where they sell the most. So it's logical that they introduce the insurance product in the most demanding states. I wouldn't worry much about a lobby from Geico or Progressive. I don't think in the short term they're going to view Teslas as a massive opportunity that they should throw their resources and prevent Tesla insurance from happening. Even if they were to do so, I don't think they'll be successful. It just kind of doesn't make sense. But in terms of Tesla introducing a new product for Cybercab, that's going to be interesting. This is going to be unprecedented. And I don't think departments of insurance have seen an insurance product for individuals that assumes the car drives itself. And that's where Tesla is going to be the innovator in terms of explaining this to the insurance department and then letting them approve it. And since they're going to be taking the risk through Tesla insurance, I think the insurance departments will be fine with that. But, to answer your question, how hard it is going to be to scale to 50 states to promote the adoption of CyberCab. Scaling to 50 states, not that hard, but introducing the product for CyberCab, this is going to be unprecedented. So it can go well, it can be tough. Most likely it's going to be somewhere in the middle.
If you look at what Tesla's done from the car buying experience, they've changed the whole game. They simplified it. You open the app, you select the model you want, select the color you want, okay, select the rims, boom, boom, boom. They run your credit 30 seconds later, bing, bing, boom, approved. Here's your payment, here's your tax credits. I could easily see just doing an API call right below that for additional X amount of dollars a month. Here's your insurance, boom, it's done. It simplifies the whole process. If that becomes a reality, does that force other companies that are going to compete with personal autonomous vehicles to build their own app buying experience to bundle it in? Or do they have to work with the dealers to integrate something at the POS, the point of sale?
Good question. So I think in terms of Tesla's buying experience in the states where their insurance is approved, that's exactly how it works. So when you enter your contact information, if you're in a state that's approved, you can get a quote right away. And then you buy the car and you have your insurance active in your app and you're good to go. You have your auto ID. When it comes to personally owned autonomous vehicles, assuming that is going to be insured through Tesla insurance, I think is going to be similar. You go order a Cybercab or multiple Cybercabs, and then insurance is going to come with it, given that it's available, it exists. Okay. So what does it mean for other people? I think you have to follow this lead. Otherwise, you're going to be outcompeted by Tesla or by other OEMs that decide to go this route. But it's going to be very tough because dealers run the show for most traditional OEMs. And I don't think they can, like traditional OEMs can legally avoid that. So the only way is to work with dealers and to give them tools so those dealers can leverage the OEM native products. For example, I go to, let's say, GM dealership. I want, let's say, an autonomous Chevy or autonomous GM. And when I go and check out, I have the insurance option right there. It's literally included in my monthly payment. That's going to be ideal. I don't have to think about it somewhere in the background, and my purchasing experience is seamless. If I have to go and open the separate app or the website, go through the whole application process, and is going to be living somewhere outside of my purchasing experience, is going to be painful. That's granted that somebody like Geico or Progressive can come up with a product in the first place. So I believe that everybody will try to follow the Tesla's lead when it comes to integrating insurance. They're not gonna do the exact same thing because the way the legacy industry structure is going to prevent them from doing that. So the best thing they can do is that they can come up with new tools to give to dealers, to their distribution force, so they can use those tools so OEMs can make money. And that's also going to facilitate the adoption of their autonomous vehicles. Pretty much what you said is correct. It's just I kind of repeated that in a more expanded way that's what's going to happen.
You put it in insurance lingo, Sergey. You insurance-fied it. How, if you look at following Tesla's lead, they've been at the forefront for a lot of design changes in vehicles, getting rid of the stocks, which is brilliant. I'll tell you, how owning a Tesla with no stocks, I don't like driving a car with stocks. It feels obsolete. Tesla took the leap, and I say this is a prototype. It's not a mass production vehicle with Cybercab, of removing the steering wheel and removing the pedals. I could see more traditional OEMs that keep the steering wheel and pedals for backup reasons, or Tesla turns on full FSD unsupervised on the 3s and the Ys. How is that going to change from a liability risk perspective when there is a wheel and pedals you could take over, where in a Cybercab, there is no way for you to take over?
If you don't have a steering wheel or a pedal, you assume no functional control of the vehicle. Even if you own the vehicle, and it's written under your name, you do not control it. So in that regard, you are not responsible for the performance of the vehicle. But the insurance laws are structured in a way that it doesn't matter whether it's you driving, whether it's the software driving, you as the owner must have insurance. It's the state law. And I doubt the state laws are going to be rewritten for the purposes of autonomous vehicles in the near future. Okay. So you have to have insurance. Now, the question is going to be, okay, how that insurance is going to work? Well, if Tesla insurance bundles coverage together with my Cybercab monthly payment for financing, then I'm gonna purchase that insurance, right? But since it's within Tesla, it's like Tesla will assume the responsibility for their own performance because it's their own insurance, right? So if a claim happens, it goes back to Tesla. It doesn't go back to the third-party insurance company. So everything stays within the Tesla's ecosystem. They can look what happened, they can honor the claim, and then they can adjust the rate the way they want it to be, okay? And then Tesla will have to figure it out with their reinsurance partners, and that's a separate conversation. So in that regard, I believe if you have a steering wheel, if you don't have the steering wheel, as long as you have the insurance coming from the OEM, you will be fine. You need to make sure that the product is live, has been improved, etc. One thing that I'm concerned about is, when accidents do happen, how the repairs are going to work. When you have a new vehicle design, and that's even beyond, not having the functional control of the vehicle. If you look at the shape of the Cybercab, it's an unusual shape, okay? If you go to any body shop today, they're going to be like, I have no idea what to do with this thing. So Tesla is best equipped to fix this. And, I believe that's where it's hidden. It's not on the surface, but Tesla's insurance or any OEM-backed insurance advantage is going to be in repairs. And Tesla knows the best how to fix their own vehicles because they manufacture them. Same applies to, GM and possibly Hyundai. Tesla has an advantage that, as far as I know, they can do their own repairs. I'm not sure if GM or Hyundai or others are equipped for this. But when you introduce personally owned autonomous vehicles with modified designs, modified from the traditional ones, no functional control, you will have to take repairs into account because it's also going to have a huge impact on insurance. So the fact that Autonomy introduces new vehicle types and the way the vehicle is going to look on the inside and the outside is going to be different, that means that there are different materials, the way they are manufactured, that's huge for insurance. Traditional insurance companies will have a hard time with that. And that's only going to drive the costs up. That's going to prevent adoption and all the bad stuff. So it's another argument that insurance for autonomy is going to come from OEMs. It's probably the best setup for it.
You open the hatch. Now I'm going to jump down the hatch. I was watching a submarine movie, so I'm going to give you a submarine comment. I'm going to open the hatch and I'm going to go down to the submarine and get into the belly of the beast here and ask you a question. This is all hypothetical. The repair is done. Since you're not driving it, I'm not driving it, the car's driving itself. Who calibrates the sensors and who deems it safe and certified, ready to go? Because as in the human body or in the submarine, there could be internal damage that perhaps wasn't uncovered. How is that uncovered? Who certifies it after there is a repair in the event of a crash?
First of all, in order for the vehicle to hit the road, it has to get an exemption from NHTSA if it's not going to have the steering wheel or the pedals. And, I know that you recall Cruise Origin, Waymo works with Zeekr. There is a way, I think they got exemptions from NHTSA or Zoox. I think they got exemptions for NHTSA for not having pedals and not having the steering wheel. So that can be done. In terms of having like a official certification for the vehicle, I don't think it exists in autonomous vehicle space. I'm not sure it's going to exist. You can look at Tesla, the manufacturer itself. And if Tesla adheres to a certain standard or principle in developing both the hardware and the software, great, But if they don't adhere to those principles and they still have a great vehicle and it shows really good performance, that's also acceptable. I expect that there will probably be maybe some federal regulation that will set certain benchmarks, certain standards for what you need to show before you can hit the road. And it might be that you need to show some unbiased performance data and how it compares to, let's say, human statistics. That's what right now Tesla is pushing. I doubt that they will impose any particular certification on autonomous vehicle manufacturers. Maybe down the road, but not in the short term. They're probably going to leave it up to OEMs and their choice of compliance, and also leave it to the states and what states want to see. For example, when you try to get a permit from California, from their DMV and the Public Utilities Commission, they're going to ask you a lot of stuff, okay? But they're not going to force you to show compliance with any of the frameworks. It's like, okay, what do you have? Okay, you have this compliance, you have this data, you got a NHTSA, they look at your package, and then they give you a green light. But it's not rigid. It's more flexible as far as I know. So in that regard, I don't think we will see any certifications per se. There might be laws, but again, I think the laws will not be very structured or rigid. I think it's going to be up to the OEM how they're going to prove their performance. And and then the OEM will just have to bear the responsibility for what they put out. And if this thing doesn't work, it's going to be pulled off the road and the OEMs will lose money. But if this thing works, they're going to make a lot of money and everything will be fine.
So the OEMs post repair will accept the liability and the responsibility post crash. We all know historically your insurance rate goes up. Do we see a big rate increase there? And then if something does happen or malfunctions and it turns out it was the repair issue, not the passenger's issue, how does that complex the insurance from a pricing perspective?
It is going to be a part of the actuarial model or the actuarial table. So think about it this way. If you have a crash due to the performance and the OEM is responsible, and there is an uptick in the frequency of those crashes, and then you have to repair all those things. And then you're like, okay, I need to hike the rates by 20%, otherwise I'm not going to cover the losses over the next 12 months. And that's what the model is going to spit out or something like that. Then the cost of insurance for all CyberCab owners is going to go up. And there is not much you can do about it. And, I guess, this is going to happen. I mean, there's going to be fluctuation, but I guess if you look out longer term, if you extrapolate the performance of not just Tesla's FSD, but if you also look, let's say, at Waymo and their public data, it improves exponentially. So I think at some point, I think, there might be short-term fluctuations in frequency in different regions, but if you zoom out and you look at the 12-month periods, the performance is going to be improving exponentially. And then as a result, the frequency should be dropping overall. And in that regard, the insurance is going to become cheaper and cheaper and cheaper. It means that there are fewer accidents and I'll need to have fewer reserves to cover the claims. Now, one thing that's unknown, and that's something that early on we'll have to make estimates about, is litigation. If a Tesla gets into an accident and you know it's been autonomous, and the third party, let's say it was a human driver, as soon as Tesla hits them, or they hit Tesla, they got the dollar signs in their eyes. And then you have a law firm contacting you right away, and then, okay, this here hurts and here hurts and everything hurts, and I can't work and I can't see, I can't sleep and stuff like that. And then you have to go to the court or settle for a certain amount. Now, I think this is an unknown component. And there's no public data about it. I'm pretty sure there were accidents where autonomous vehicle companies had to settle multiple times for a lot of money. And the only way to overcome this is just to have a incredibly performant self-driving software, up to the point that, we kind of get rid of most of the accidents, and everything that's left, even including litigation, is going to be a part of the insurance coverage and is going to be priced very attractively. So I'll tell you that there'll be fluctuation, but in the limit, it's all going to go down to a certain level, given that we figure out the litigation process.
Do we get to a point where if you're going to go to Disneyland or Universal, if you actually read the back of the ticket, you're waiving a lot of rights? Does that come built into the lease for a cybercab where you're waiving a lot of rights? Even if you go to a baseball game, you're waiving the right to injury for a foul ball or a flying object. I'm not a lawyer, so I can't give you all the technical terms, but you're waiving a lot of rights. Do we see those built into the policies? Because you're right. You see now in San Francisco, unfortunately, people do horrendous, not nice things to attack the Waymos. There was a really great one, and the police from San Francisco came out, said the guy faked the whole thing and released the data. The Waymo comes, the guy drives his bike into it. The Waymo hit me. Let's get some alphabet stock. And the police go, here's the video. You should, and then lo and behold, away it goes. So, because there's going to be, and I'm going to use a derogatory term, there's going to be ambulance chasers that are going to be chasing these things, trying to behavior because perhaps they don't like the politics of Mr. Musk. Perhaps they don't like what Tesla stands for, or perhaps they see a gravy train of money. So does that get bundled in to help limit that? And then can you insure against that?
In terms of waiving your rights, it's an interesting question. Technically, if you purchase a product, I don't think you can give up your rights because I purchased it. It belongs to me. I can do whatever I want with it. But if FSD is provided to you as a service and you subscribe to it, there are terms and conditions. So I imagine that people buying cybercabs, they will be subscribing to the FSD service that will come with terms and conditions, and there might be language about the limitation of Tesla's liability. For example, if I purposefully, somehow, I don't know how it's going to work, but if I purposefully use CyberCab to create a dangerous situation by misinstructing it or doing some funky stuff with it or modifying it, then if an accident happens and a claim happens, then Tesla might be off the hook or something like this. And it all will be proven through the data during the investigation process. So I will say the terms and conditions to FSD subscription will definitely be a part of that. And in terms of managing or preventing crazy situations like you described with Waymo and the cyclist, the only way to do it is through, there's definitely the rapid response, the police and the ambulance, etc. But you need to pull the data, and there's going to be truth in the data, and that's going to be undeniable. If you have a recording, a video recording that clearly shows what happened, and you could see when somebody's trying to fake this, even if you go to the court and you have the jury and you show the video, it's like they're going to be like, oh, this is fake, So the ability to pull the data and get it into the hands of right people ASAP is going to be key. And this is, by the way, companies that want to make sure that they don't get screwed with litigation, they'll have to utilize this. You have to use some form of a tool, because I don't think you can send a 10 gig video over the email. You want to have a tool that helps you with that. So I will say the benefit of the autonomous vehicles is that they see everything. You cannot lie. It'll be reviewed. And that's how we're going to deal with crazy situations and crazy people like you mentioned. So again, comes back to data, comes back to tooling, comes back to productizing insurance. And of course, we as the insurance company that can be providing coverage for situations like that will want to have the data ASAP. If anything, we're going to be providing the tools to OEMs or whoever to make sure that we get the data ASAP, because it's going to help us avoid litigation.
What type of tools those look like? And I'll give you the Tesla example with Sentry. There was I parked somewhere yesterday, and the gentleman was doing tree work in front of my car, and I got an alert. Oh, okay, no problem. He's just cutting the trees. That was interesting. Is that going to be the tool? But instead of going to me, it will go to you as the underwriter. Will you build a, let's call it Koop Rails, perhaps, where there's any time of incident, you'll get your underwriting team will get a real time notification to your algorithm, and you'll build a set of, I call Koop Rails, and I'll use the analogy of payment rails. Okay, so you swipe your credit card. Okay, approved for, you bought a sandwich for $9.99. Okay, approved. Is that kind of what you're going to build for insurance to properly price these things? Because there are going to be instances you're going to have to know about in real time.
Yeah. So we actually already have it today. So the data that we collect from autonomous vehicles, we track a lot of behavioral events, and we know if there was a suspected contact. And it could be a contact with another vehicle, with a person, with a piece of infrastructure if you run into something. So we know that. And now, as soon as we know that, there is a way how we can mark what vehicle, what location, what time period, and then you can look at the evidence right away. Given that the video footage gets automatically saved by the autonomous vehicle company, and we can pull that data over API, and we can review everything. So we're already doing this today. When it comes to Tesla and going back to the Cybercab, it's the personally owned model. So what I envision is going to happen is that Tesla Insurance, in their app, you will have an ability to review all suspected accidents. And for each accident, you're going to have, 60-second footage, like 30 seconds before, 30 seconds after. And you, as the owner, will be able to review that. And since Tesla Insurance is going to be covering you, Tesla Insurance will have access to the same information. And that could be beautifully orchestrated in terms of how it looks like and how it gets accessed and how it's used for further investigation purposes. So the answer is, when it comes to our capability, yeah, we can do this, but right now we only work with fleets. If we were to build a product for personally owned autonomous vehicles, that capability will transfer 100%.
What you're describing empowers the end user. Once the end user is empowered, the whole market changes. Could Tesla now go on to completely revolutionize the insurance market the same way they revolutionized the electric vehicle market and they're in the process of doing with the autonomous vehicle market?
I think they've already done it. Even Tesla Insurance that you have today is pretty good. The way you get the quote, the way you can report a claim, the whole user experience, it's already pretty good. That's why it's at $500 million in premium. I know they're incurring losses, meaning that they're collecting less than they're paying out. But when you have a new insurance operation, it's just a matter of time until it matures to the level where you can make money from that. And in terms of user experiences, it's as far as I know, it's really good. And I think one thing that other OEMs can borrow from Tesla is that Tesla took an approach of productizing insurance. They literally turned used insurance, which is a very known pain point, and it turned it into a well-made product that people actually like using. I think for other OEMs, that's a great lesson, is that, well, at some point, you should productize insurance if you want to really make your customers happy. Now, how you're going to do it is a second question, but productizing insurance is something that we're going to see more and more as mobility becomes more of a experience than anything else. So insurance being an important part of that experience.
When you look at productizing it, so that's on the personally owned side, but at some point you're going to have a hybrid network. So you're going to have personally owned autonomous vehicles and you're going to have robo taxis or shared autonomous vehicles. Do you see a liability policy that you'll basically carry as a rider carrying over with you from the personally owned to the robo taxi? Because I remember years ago in our mutual friend Mike Stradato at Munich Re, they did a policy with Waymo where if you left the laptop in the Pacifica minivan, it was insured. So do we see some sort of liability policy, or in case something happens or incident, if you get injured, carry over to that? So you're a walking insurance policy?
If you own a Cybercab and when you drive it yourself, let's say you have an insurance policy from Tesla Insurance that protects you. So the first party also protects against third party liability. If you decide to put it on the network, as soon as you put it on a network, it technically becomes a part of the fleet. So now it has to be protected by some other policy because you no longer in possession of the vehicle. I mean, you still own it, but you physically do not have it. It's doing rides for other people, and the way it's performing is outside of your control. So there has to be a policy at the Tesla level, at the Tesla fleet insurance policy, that will provide insurance for the riders when they're using cybercabs And Tesla will have to provide, first party and third party liability insurance, including some personal property. And that's going to be interesting because, well, technically Tesla, it's like Tesla insurance can do that. And since through Tesla insurance, they have access to the vehicle data, so they know when it's part on the network or not. They can easily break it down. And in your Tesla insurance app, you'll be able to see that, look, that's how many hours it was used for ride sharing, here's how much insurance was accrued to it, and vice versa. This is your personal use, something like this. So, I think it can be done. If anything, fleet is easier to do than personal, and there has to be a switch. Otherwise, consumers will be puzzled, like, well, why am I paying for insurance where I have no control over it? And then Tesla maybe will figure out how to charge people for insurance when the vehicles are on the network. Let's say if you throw your Cybercab on Tesla network, it makes you, let's say, $1,000. Then Tesla, let's say, will take a half because for the network that they provide, and maybe they'll take 10% for insurance costs as well, something like this. So again, it might sound confusing, but you have to realize that everything I just described comes back to Tesla insurance. And if they're gonna do it, they can do it, I think, really well. For other OEMs, it's a big question. I think other OEMs might have more luck if they decide not to do it themselves and own the insurance vertical. Their second best option will be working with Koop on that.
Because if you think about it, if you're going to put the vehicle out, you don't want to front the cost. Oh, it's going to cost you $500 a month to put, the whole network will collapse. You know that people won't want to do it. But if you just deduct it out of your earnings and you get a complete breakdown, that gets really interesting. To me, the bottom line is the insurance is solvable either through Koop or through Tesla or through another third party. Because let's go back in insurance history. Hartford Steam Boiler, now owned by Munich Re. Well, they were founded to figure out how the heck do you insure steam boilers. Then you had elevators. How do you insure elevators? All these insurance questions have come up over time and have been adapted and have been solved. The big difference between steam boilers, elevators, and vehicles are going to operate on public roads, different geographies. What impact are different geographies going to have? Because if you're in the Northeast where you're located, you've got a thing called snow. And if you've got black ice and you have risks, and we have on the East Coast, we have 95 and the most dangerous stretches of highway in the country. Then if you go to the Southwest in Arizona, you've got windstorms. And then if you go to other parts into the Dakotas, you have hailstorms. What impact is geography going to have on these rates?
Well, you can think of it through the prism of frequency and severity. And like you said, any new technology, eventually the insurance industry figures it out. I do believe that insurance industry becomes more and more technical. You have to be more technical to underwrite new things. But at the end of the day, everything comes down to frequency and severity. So you will have different regions where you're going to have personally owned AVs, commercial AVs, and if the weather situation there is harsher, it's going to result in, let's say, higher frequency of events. It might be also same severity or slightly different severity. You go down to the south where the weather is nicer, or let's say maybe, hurricanes and the flood, it's all going to come up through frequency and severity. And, you're going to end up in a situation where you're going to have regions where insurance is cheaper. And like today, let's say if you own Tesla Model 3 and you're trying to get a quote for in Ohio, it's like $50 per month. You're trying to get a quote for Manhattan, it's $700 per month. That's because the frequency of events of claims in Manhattan and probably the severity is higher there versus Ohio, where maybe you're driving in a suburban area in the middle of nowhere and there's not much going on. So it's all going to come down to this, and geography will be a variable in that frequency and severity equation.
There's certain scenarios and there's certain carriers in Florida where the state minimum legal requirement for nothing fancy is more than the Model 3 payment. That's scary. Whereas that's there's something wrong with that model there because that's hindering the growth. And you're starting to see people are, oh, the hell with the insurance. I'm not going to deal with it. Or they're skipping it or they're cutting costs every which way they can because they want the vehicle, but the insurance costs are so high. Staying on the weather theme, this is a draconian censorship thing, but could the insurance company say, wait a second, your vehicle cannot operate in these weather conditions. We're not going to allow you to go and deactivate it and to lower they're saying, well, it's a risk. Does that ever come in the future, or are we crossing this dystopian line then?
Well, an insurance company can cancel your policy, and technically, you will not be able to ride or operate in that particular location. That's for sure. Operating without insurance is illegal. Doesn't matter if it's a personal vehicle or a commercial vehicle, no insurance, no driving, illegal. Do not do that. Unfortunately, it happens, and there is even like when you purchase an insurance policy, auto insurance policy, there is a line item for underinsured or uninsured motorist, meaning that if somebody runs into you and they don't have insurance, then your insurance will kick in, and that underinsured motorist clause will go into effect. Unfortunately, that happens. In terms of the insurance company turning off your CyberCab because you don't have it, I mean, I don't. A third party insurance company will not be able to do it. Tesla insurance, maybe. I mean, if let's say you have your monthly payment and it doesn't go through, and then you technically your policy is about to be canceled, they might suspend your FSD subscription, but then it's going to be like, okay, at some point you have to give up that right through terms and conditions that, okay, if Tesla insurance notices that I haven't paid for insurance, or it lapsed, that it can suspend my service. It has to be written out. We're getting into the legal zone, but I mean, theoretically it's possible. Practically, I don't think it's going to work.
We saw it with Ford. They filed for a patent for that, and the outrage is on a patent.
Nah, it was crazy. Yeah, I know what you're talking about.
The consumer wouldn't go for it. You would have outrage, and the vehicle would be the worst selling vehicle in America, not the best selling vehicle. I'm curious from an actuator, from a table standpoint. You're underwriting. We're going to call it CyberCab A and CyberCab B. CyberCab A was what we saw at Warner Brothers. No steering wheel, no pedals. CyberCab B, pedals, steering wheel. How does that change from an underwriting perspective? Because to me, the risk has changed, because if in B, I can grab the wheel and say, I'm going to drive in the other lane of traffic and zoom around, where in A, I have no authority because the vehicle is going to follow the rules of the road.
Actuarial tables for vehicle types, they do exist. And you have actuarial tables for personally owned vehicles, light vehicles, for medium duty, heavy duty, etc. And you also have actuarial tables based on the location, on the zip code specifically. Okay, there are also actuarial tables for different industries or use cases, etc. So you saying that there could be different actuarial tables for fully autonomous vehicles or autonomous vehicles that have human driver input, it's possible. They'll also, I mean, for a table to exist, you need to have it has to be two dimensions, X and Y. It has to be okay, this types of vehicles or this locations, and the table gets populated. You need to have two variables. If you have the data, creating a table is not a problem. And you can even do it in a more sophisticated way. You can do it per zip code, per vehicle type, personal autonomous vehicle mode, fleet mode. You can differentiate across all of that, and you can charge people accordingly. It's secondary. The most important thing is that when you have data, and if that data is going to be within the Tesla ecosystem, then Tesla is going to know everything, and maybe they will be required to publish this data somehow so other people can use it, maybe. But for the third-party insurance companies accessing the data, unless they have a plug into Tesla or Tesla allows them to do that, it's going to be really, really hard. So again, we're going back to what I said earlier today, is that Tesla insurance is the way how to make sure that CyberCab gets adopted, and everybody else who wants to follow their path, follow their lead, will have to figure out how to productize insurance all the way down to actuarial analysis.
You have to follow Tesla's lead. When you're following their lead, there's risks. What are the biggest risks when it comes to insuring personally owned autonomous vehicles?
Biggest risk for the insurance industry is that we have never seen a technology like this. So there are no precedents. What does it mean? We haven't seen software drive on public roads alongside other people. That's very new. And all the insurance companies are conservative about it. And I'm pretty sure there's going to be a whole agenda or lobby against autonomous vehicles for whatever reason. But, it's probably going to be stupid, most likely, but because in limited autonomous vehicles will save a lot of lives and will make money for insurance companies. But I think the biggest risk is that there is no precedent, and as a result, the insurance industry will drag their feet. There's going to be maybe a couple of insurance companies like Koop, like our partners, who will be shipping new products and will be the first movers, and as a result will own the market, but most of the industry will be lagging. And when I look at building an autonomous vehicle product, you're pretty much making the performance of your insurance product will be correlated to the performance of the software that you're underwriting. So you have to understand the software. You have to understand how it's written, how it's debugged, and how it performs. And if you don't have an ability to do that, no luck. The software is going to be changing a lot. So if you look at the previous performance data, it might be not indicative of the future performance data. And your ability to estimate how much the software and the performance will improve is going to be key in underwriting insurance for autonomous vehicles appropriately. So the biggest risk is that it's unprecedented, and you will need to be more technical about autonomous vehicle insurance than about any previous insurance before that. The only way to solve this risk is to figure out how to build great technical products. I think with Koop de-risked this, but most of the industry probably hasn't done it at this point. So yeah, it's a product risk. It's an engineering risk. The market regulation will follow. I wouldn't worry about this, but you have to figure out how to build it, and you have to be very smart about it if you want to conquer that space.
When you look to conquer the space, you're on one. Coop is one part of the pie. There's another part of the pie called reinsurers. Do they have the appetite to stand up in reinsure and take on this risk for personally autonomous vehicles? Or are you seeing hesitation from that side of the market, what you're seeing from traditional auto insurers?
We work with one reinsurance company, the biggest reinsurance company in the world, and they definitely have an appetite. They have an appetite on paper. What does it mean? They understand that it's coming. They want to be a part of it. No question about it. Now, the challenge is how it actually gets executed and what kind of insurance product we're talking about, what kind of coverage parts, limits, how we're going to go and approve the product, how often the data is going to be collected. If an accident happens, how soon we can get the evidence. In order for them to launch a new product, you need to be able to answer all those questions. And if they are unable to answer those themselves, they need a partner like us. But I think if you go to any reinsurance company and you tell them, well, we're going to have millions of cybercabs, do you want to insure them? They're going to be like, yeah, that's the future. We definitely going to want to insure this. When you ask them how, that's where they're going to pause.
When do you see the first personally owned autonomous vehicle policies being introduced to the market? If somebody put one out as a prototype, a floating issue, when do you see that? Will it come when the Cybercab comes, or will we see the industry kind of put forward perhaps a framework prior to the Cybercab publicly being deployed?
I think we might see how it's going to play out with the Cybercab because they gave a timeline of the end of 2026. Let's make it 2027. If they start selling those in 2027, you must have insurance figured out. If you don't have it figured out, you can't sell it. People will not be able to buy it. So in that regard, it's something has to be under development right now. In terms of other OEMs, there is a partial approach to you can take the existing insurance products, you can modify them for ADAS, L2, L3. And if your vehicle is equipped with ADAS, you might give some discounts. And, it's not that hard to do. It can be done today. But it could be the first step towards productizing insurance. And then once you have it built out, you can build a new product on top of that infrastructure for fully autonomous vehicles. But I don't see other OEMs doing that as soon as 2027. In that regard, watching Tesla and watching them be the first in shipping not just the Cybercab, but also the insurance product for the Cybercab is going to be exciting. And I can bet my horse that they're going to do it through Tesla insurance. There is no other way around it. And then after that happens, we'll see how the industry is going to evolve. But other OEMs, if they don't want to do it themselves, they'll have to partner with a company like Koop to make it happen.
Tesla's setting the market. Koop's insuring the market. Sergey, we always love having you on here, and we thank you so much for sharing your wonderful insights on the autonomy markets and the insurance markets. As we look to close for today, what would you like our listeners and viewers to take away with them?
I hope everybody's excited about the future because give it 5 more years, you're going to have self-driving cars that you can possibly own. You might have robots at your home. You're going to have personal assistants, AI agents doing stuff for you. All of that, of course, will be insured, hopefully by Koop. But be excited about the future, and we'll make sure that it's properly insured.
There we go. You're right. The future is bright. The future autonomous. The future is insured by Koop. Yeah. Sergey, thank you so much for coming on the road to autonomy, and thank you so much for being the premier sponsor for This Week in the Autonomy Economy.